Jeff Lutz, I have no idea. I can't, it's hard for me to imagine what this particular audience would want to hear about today. Could you?
Yeah, is anything going on?
Yeah, no, it was like just a boring day. There's no reason to call it Good News Wednesday. But maybe there was a couple of things that they're interested in. I know that I probably get my highest numbers, the biggest numbers on this channel when there is a good day on the market and when I try to explain what happened.
Yeah. Yeah.
So I'm not going to explain it, Jeff. I want you to explain it. Talk to me. I gave you a list of a bunch of ideas that I had, but let me set it up. All right. Yesterday morning, I speculated that we were on the kind of seeing the 8-8 event overtake worries about what's going to happen next Tuesday and what's going to happen in the earnings report third week of July. That people were more focused, they've changed their focus to the long-term potential for Tesla instead of this short-term numbers game. So right now, normally we'd expect the stock to be under a lot of pressure. Instead, 3 days in a row, we've seen nothing but upward effort taking place, with 2 of those days ending up with big gains. So I'll now turn it over to you. I gave you a bunch of suggestions. You probably have better ideas than I do. What do you think is going on here?
Yeah, I think the markets are starting to bake in. Remember, a lot of P&D reports for many quarters, Tesla had been beating them. And it was kind of a buy the rumor and then sell the news. And I think the rumor now is Tesla is going to miss, but it's going to be better than the first quarter. And a lot of analysts are starting to bake in lower numbers than they previously had to start this quarter with. And they're just baking it in, but they're saying, hey, look, this P&D reports in a week or so. But a month later, they're going to have this event that's could be the biggest event that changes the course and structure of the company forever. And why not look ahead to that? And I think that's what's part of that. That's what's happening. The other thing is the stock has been in a technical, base forming range for a long period of time. And, the news out of the shareholders meeting, which was just, believe it or not, not even 2 weeks ago, was good.
Yeah.
And it lifted a cloud off the company. And you can see Elon's behavior since that meeting, even slightly leading up into that meeting, where he's just all Tesla all the time. And even if there's any messages or posts about Tesla's valuation or Tesla being the most valuable company, he's on top of those and saying, yep, this is what we're driving for. And it's certainly possible. A lot of execution ahead, but it's certainly possible. So I think when you put all these factors together, you have the technicals, you have the 8-8 event, you have analysts that are either, there's some downgrades, there's some reiterations, there's some new coverage, and they've got some pretty lofty price targets on the stock. So I think we're in this period, and we've always talked about this: is do you wait for it to happen, or do you try to gain alpha going into it? And I've said this before, just on sentiment alone, Tesla could go up 30, 50, even 100%. We saw that last year. A stock near 160 in May go to near 300 in July.
Right.
And there was nothing significant that happened. Rates were a touch lower, but you're still very high. So anyway, I think it's a number of factors, and I'm looking forward to, 220, I think, is a critical point. I think that's still around the 200-day. And so the stock is technically broken below that. So now you want to see it get over the 50 and then close, robustly over the 200-day. And when it starts doing that, then everything changes.
So we've had a bunch of different, as you mentioned, analysts, some of the regular players, the Dan Ives and whatnot, that have been very bullish and talking about this change, about this opportunity that's coming. People estimating, giving, I think Dan Ives has now got it at 350, so double, what it was a couple of days ago. back over $1 trillion in value. But then we have, and I didn't have time to look up this Stifel, Stifel.
Stifle, yeah.
Stifel, is it Stifel? Okay, that's a pretty funny name.
Yeah.
I was figuring they would have pronounced it Stifel because Stifel would seem like such an odd thing to call themselves.
Yeah.
But are they of any significance? They gave a very lovely note today.
Yeah, I think they are. They're pretty well known. I mean, they're not, Bank of America, Goldman, JP Morgan, Morgan Stanley, but they're up there. So yeah, that was new coverage for them. And really part of this is also just time passing. If you think about it, we haven't really seen this wonderful 12.xx FSD release. It's only about 3 months old where it's been out to the broader population. That's not a lot of time for everybody to get behind the wheel, to see it, to even see videos. See videos online is one thing, to be inside of the car is another experience. And I think we're just getting closer and closer on these things where there's less and less uncertainty. There's now less uncertainty about Elon's commitment to the company. And the further we go along in these releases, the less uncertainty there is about Tesla's ability to make money outside of selling, bending metal and selling vehicles. And that's what puts the big multiplier on the business is can Tesla make money outside of bending metal and selling hardware vehicles? And the answer is yes. And the answer is still yes, that they're the only profitable EV producing company in the world. There's no other data that disputes that at this point. And they've also made moves. This has all been in this quarter. They made the OpEx moves on the headcount reductions, both on OpEx and COGS. There were
Right.
reductions in factory personnel as well. So it's going to hit OpEx, it's going to hit COGS, it's going to hit gross margins, it's going to hit operating margins favorably. You'll have a one-time charge, but the ongoing run rate will be greatly improved. I mean, a 14% reduction is, if that's true, that is significant.
Yeah. So you were talking about people getting behind the wheel. One of the people that got behind the wheel was the XPeng CEO, and he had good things to say. Do you think that was part of today's move?
I'm not sure. I mean, these, I have a little bit of a crude, viewpoint on just, I'm glad that these other companies are participating and realizing, but they need to get in line and they need to figure out how they can work very efficiently, very quickly with Tesla. You either do that. Again, we can't have, just your lying eyes are not deceive. They can't deceive you. You're either buying this compute on the training side and you're designing, developing, deploying the compute on the edge side or the vehicle side, or you're not. And and I would venture to guess a lot of the vehicles that have been produced, a lot of the non-Teslas that have been produced to date have autonomy built in that's 2, 3, 10 times more expensive than what Tesla has in their vehicles, and it's probably not going to be useful. It's probably not going to get these companies what they need. So yeah, they should they should try it out, and they should, quite frankly, get in line to get a license from Tesla, or quite frankly, have your own solution, be building your own compute in the background and be ready, with your own solution. But these articles I see about Ford magically having a driverless solution in 2 years, I think that's the licensed solution from Tesla. And again, unless, you just have this complete misunderstanding of what the CEO was describing and what people want. People want to, get in a vehicle and say an address, or the car to already know the address and go to its destination. They don't want to be limited under 40 miles an hour, only in good weather. That's the level 3 that's in Mercedes today. So, and only on certain highways, and things like that. So, the consumers want the full thing. They want, what they saw in the Jetsons. They want that.
So there's, one thing you have to always overcome is the reluctance of the street or of the investing public to get into something they don't know enough about, whether it's ever going to work or not. That would certainly be true of robotaxi. So do you think the Waymo, I would call it success, the fact that they've now unveiled it, and they've got 300,000 people signing up for their app in San Francisco area alone, is that maybe impacting the stock today as it becomes more of a real thing that people will get the app and be interested in taking a ride?
It certainly validates robo taxis as the concept of people wanting to get into a vehicle, not necessarily have to talk to somebody, not worried about if they're going to, contract a virus or what have you, and they want to just get into their own private situation, be on the phone, do whatever they want to do with the volume or the air in the car, and it certainly validates that. But I don't know if that's necessarily driving the price action in Tesla. Honestly, I think we're rolling out of, we had a couple of day adjustment period out of that shareholders meeting.
Mhm.
And I think, I think these trading desks, I think a lot of people, hey, look, like, this stock's been beaten down enough. And a lot of people are already baking in the lower estimates. It's fine. They're still going to be far and away EV leaders. And also, I think, this Volkswagen Rivian announcement is also kind of further solidifying that, one of the biggest automakers in the world sees EV as the future. And I think that could be part of it, right? There's money coming into EV if you have great technology. And I think Rivian has some decent technology. I wouldn't call it a treasure trove per se, but they're certainly outclassing legacy auto in their ability to drive the technology to enable EV, whether it's on the software side or it's on the hardware electrical side that they're talking about the zonal electronics. So I think it's just further validating the space too, that if you develop great ground up technology in EV, it's worth something, very valuable. And Tesla has it in spades.
So if I am maybe an older investment person or somebody that's hasn't been paying a lot of attention to tech. I mean, I almost have to pay attention to tech, but maybe I'm a value guy. Maybe I'm just not as oriented to tech. It becomes harder and harder, I think, for people to understand even NVIDIA. I told my wife a couple of weeks ago that I'm not going to play NVIDIA because I don't understand NVIDIA. It's just an honest truth. Now, I could probably spend 100 hours and understand NVIDIA enough to invest in it, but right now I'm not interested in doing that. But all of a sudden you have NVIDIA saying Tesla is big in AI. You have other folks coming out and saying that they're a driving force in AI. You have some people saying, which is true, they're the only person that has a profitable AI product. And then all of a sudden now you're seeing a picture of these massive fans. And I just kind of wonder whether for that person that is kind of not in the AI space, not quite in the tech space, they know they should be, they know they got to be invested in tech, it's going to be the future. Is all of that starting to also infect maybe that middle of the road investment situation?
I think that's part of what's happening with Tesla. The Tesla story in 2019, 2020 was a little bit easier to cover because they're going to go from shipping this amount of cars to this amount of cars. And the traditional auto analyst could cover the company and say, wow, there's massive growth here. They make way more gross margins than anybody else in the industry, deserves a pretty high multiple. Boom. Very easy story for the street. Now look at the mosaic you have in 2024. You have flattish auto sales, but you have this massive burgeoning energy unit that's growing. You have a company that has ground up software and ground up silicon to make the cars drive themselves and move about through the world. Arguably, maybe the most amount of AI that's actually happening in the industry happens with the instruction set coming from the vision in and the output controls to a Tesla vehicle. How many instructions is a simple drive happening? How many hundreds or thousands or many tens of thousands of instructions are happening all through AI inference and then instructions and control out. Um, and I think what's happening is it's such a different company now, FSD, energy, robots, that the traditional one category analysts are going to struggle to actually cover the name and assign an appropriate value to it. So you have analysts like I think Wedbush is trying to do it. I think Morgan Stanley with Adam Jonas is they are probably the most outward company that is actually, he's an auto analyst, but he is definitely talking about the other components of the business. But many of the other analysts do not. And this may be kind of a wormhole for retail shareholders to get some alpha by saying, hey, look, if you study the company, if you're watching, videos on YouTube of analysts that are trying to dissect and understand where the company is going, you may have an advantage over what these trading desks are being sold to from these, um, buy side and sell side analysts. And that could be what's happening here too. And analysts, they may have to change the makeup of how they cover the company, because you need energy coverage. You need somebody who understands the software side and how to scale, how a SaaS business scales. Because if you're an auto analyst, you're not discussing SaaS with any other of the other automakers. You're just not. So I think that's part of what's going on.
So how much you've been doing this, you've been playing the market for a very long time. How much of the move happening right now do you think is because we now have a date certain? We know 8/8 is as I think it was Dan Ives said, the historic date.
I think the certainty, quite frankly, from the shareholders meeting is driving a little bit of this bump. And again, I think the analysts bringing their numbers down for Q2, and that, I think that's going to be, you may see the P&D come out, you may see some sort of dip, and then you may just see it go up. I don't know what's going to happen. I don't like trying to call individual days, but I think it's going to be a, you know, a buy the news type of event. Like, okay, it's done, it's behind us, we got it. I think Tesla just need to keep an eye on what's happening with cash, what's happening with working capital. Is there a story throughout the remainder of the year? Are they going to raise? Do they need to, given their lofty ambitions with compute? Do they need to raise? Is a company like Tesla going to have any problem raising capital? My guess is no. And so that may be a variable that's out there as well. Um, but honestly, I think the certainty is Elon is the CEO of Tesla. He is highly motivated because how many years in a row has he said we believe we'll have a self-driving vehicle by the end of the year? So he wants to be that person that delivers that message of, we now have unsupervised full self-driving. We have a solution that can get through level 3, through level 4. We're working on, level 5, but it's honestly going to be like, what's the consumer experience? And he puts it in terms like, will you have one intervention per year? Kind of in those kind of terms. So we're in a very interesting time right now. Tesla is gathering more training data than they've ever had before. They have the ability to manage and compile and train on more data than they have before. So to me, this 12.3 to 12.4 to 12.5 to 12.6 movement is going to be the most telling piece of information. I think Tesla is still, kind of like, hey, how is this really going to look?
Right.
Because they trained for 12.4, and obviously they ran into a number of bugs that said, hey, you can't just put a new model in and you get a perfect solution out. You've got a bug curve you've got to drive down. So yeah, long answer, but I think honestly, a lot of certainty came in from the shareholder meeting and analysts lining up to say, we're not as worried about Q2 units and sales as much as we are. What is he going to unveil on 8/8?
And then, to the extent that people will still count units, because they will. Right now, people are talking about no increase this year. Some people are, Gary Black is down to 1.7. I think probably Tesla is down to under 1.7 for the year. But if we solve full self-driving, even if it's feature complete and not yet quite unsupervised, but if we get both, if we get feature complete and unsupervised, it would seem like the car sales would dramatically go up. We might be back on track because there's plenty of capacity to knock out 600,000 or 700,000 cars a month. So we could end up seeing actually a lot more metal get sold.
I think what you'll see if that happens is you'll hear a great, like the vacuum noise of the Tesla used car market just get annihilated and just go. You'll see the used car market just get sucked. There'll be nothing left.
Right.
And then, so you're going to have that little bit of gap in there if that's going to happen first. And then the new car sales are going to probably go up significantly. So I think that's the way that would ultimately work. I'm going to be interested to see how these incentive deals with buying down the financing, how did this all work out in May and in June, and did it provide meaningful results? I think that is going to be a very interesting thing. And remember, these people that count cars in Q2 of last year, they were actually, I think, 5 to 10% off. I mean, they were big, they were way off in Q2 of last year. And Tesla actually surprised to the upside. And that may have been a little bit of a part of the bump in through July. But just remember, they were, a lot of people were way off actually in Q1, and they were off in Q2 of last year to the low side.
I wasn't planning to ask you this, but now that I think of it, I want to ask you. So I mentioned this a couple of times already, I think, to Nicholas and to Larry. I still believe that the big problem this year is Model Y. I think it's all about Model Y. I think Model 3 is probably doing okay. We got Cybertruck's brand new product, but Model Y in the US, Model Y maybe certainly in Europe. It seems to me it's about the Juniper. It seems to me that they put out that Model 3, all the great new stuff, and then all of a sudden it's like, well, we're not going to do the Model Y refresh until 2025. Seems to me that could have really Osborned in Europe and in China. And then in the United States, I think the Cybertruck is Osborning the Model Y in the United States. We're a family that is going to get rid of a Model Y to get a Cybertruck. It's the same market in terms of the city fun vehicle, big enough vehicle, but fun, new, fresh, exciting, and there's a lot of folks out there that fit that bill.
Yeah, I would respectfully disagree that Y and Cybertruck. I mean, could there be some like in your situation? Yeah, of course there could be some cannibalization, but Tesla updates these cars every few weeks. Now, obviously they're not a cosmetic refresh. And I think people are looking for that. And I think your point about Osborning, there must have been something out there, because Tesla went publicly on the record and said there will be no new Model Y in North America, to actually close the books on that. So I think there's some validity to your point. Did they actually, did people say, fine, I'll wait another year until these new redesigned, because now they could have Osborne themselves again by saying there's going to be lower cost models in the first half of next year.
Right.
So, I mean, a number of things could be happening, but in the end, from a year ago to now, rates are higher, and it costs more money for people to buy cars unless Tesla and a banking partner buys down the rates. And to all this noise about MSR price cuts, Tesla really hasn't done any meaningful movement on price cuts, and certainly anything they've done has been commensurate with their COGS reductions. So, and that's been true for the last year. I think people confuse the COVID, coming down from the COVID high on everything, input pricing, MSRPs. I think people confuse that, and that was a price correction that Tesla did
Mhm.
versus these minor adjustments that they're doing to really to fit the market. So I think you're right, but on Model 3 had its different problem. It was supply constrained, I want to say all the way through May.
Yeah.
And I think they just figured it out starting in June in North America. And it's one of
Mm.
its biggest markets. It's 55, 60K a quarter. We only did like 12,000 in the first quarter. I mean, that is a big
Big.
portion of your shortfall in Q1. And the other portion was what happened in the Red Sea. That was a significant amount of units as well. So I actually think when Tesla said that there's a couple of explicable events that defined what Q1 is, and it also stranded inventory, I believe it because I've seen this firsthand, and I believe it. The question is there's no doubt that there's something going on with demand. Obviously, I think everybody was expecting, at by the middle of 2024 that we would be on a 600K
Right.
a quarter type run rate, and we're not yet.
So are you still playing the game? Do you have a number for next Tuesday?
Playing the game, sure. I'm not. I give respect to people who are actually going out and counting production and do the homework and track, like Brian White, for example. He does a great job, and there's others that do that, and so I give them great respect. I look at the data that they discuss. I don't have a number off the top of my head yet, though.
All right.
Nor would it be of great value because I think they're doing the real work.
You and I are in 100% agreement on that.
Yeah.
I've stopped playing entirely. Generation 2.5 vehicle, you just talked about that a minute ago. That's what I'm calling this in-between car that'll come out in first quarter or so of next year. I had a few thoughts with regard to how they'll get the price down. And this is, obviously an area where you're the specialist. I'm
Yeah.
curious to hear what you're thinking. So number one, I'm saying it will undoubtedly have fewer luxury components, like maybe not as many speakers, not as great of tires. I don't know. What do you think?
Oh, I think that there's two primary driving forces for them to take a meaningful step down in COGS. One is elongating the capital in leveraging the capital from 3 and Y. That is huge because if they were going to start a new vehicle on brand new capex, you would be depreciating from its highest value brand new capex,
Right.
and that would be a huge, and you would be sorely underutilized as you're just kind of like trying to tick up the utilization of it. So you'd be underutilized and you'd be at its highest value. So that would have been a huge drag on COGS. They're
Wow.
not doing that now.
Yeah.
The second thing that they're doing is they're taking the elements of the unbox model, which is modular assembly that happens prior to a parallel assembly process that will happen later down the line. And they're taking those modules, and I believe they're taking select modules, and these modules would have had to have been ready by the end of this year anyway to fit into the new platform ramp. And they're pulling those modules forward and saying you basically need to be, I think you need to be ready by Q4 of this year. And let's take, for example, the electric motor. It was pretty public that Tesla was driving for a sub $1,000 electric motor, and they were looking to take a step forward in terms of its efficiency.
Right.
They presented that at an investor day.
Right.
So what electric motor are they replacing? They're probably replacing a $1,400 to $1,600 electric motor that was used in the 3 and Y. Now they've since iterated on that, but the point is they're going to pull that module out, and they're going to have this module that was meant for the new platform. They're going to put it into the 3Y, to the 2.5 gen vehicle. So there will be cut and paste, probably 10 different examples of them pulling those modules forward. New battery module, new motors. That is how they're going to get this cost reduction. You could be right too. They could be doing some feature value trade-offs and saying, hey, look, maybe you don't have these many speakers, maybe you don't have this or that. But in general, Tesla likes to be minimalist, but also give, a great experience, up and down the chain. So we'll see what happens.
Got it. But
By the way, there's a number of things they could do. They could multi-source that screen. They could go, there's a number of things that they could do to take many, many dollars out of the vehicle.
They do have to have a differentiation, though, to make the Model 3 and Model Y continue to sell at the higher prices. So there has to be some kind of differentiation. I'm assuming that the battery that we'll be looking at a LFP, maybe the 0 to 60 is, 5 minutes instead of 4.5 seconds, things like that. Am
Yeah.
I? Yeah.
No, I mean, yeah, I think we're all open to speculate on this, and there's no wrong answer. I think it's going to be a meaningfully smaller vehicle, which will help on aggregate COGS, but
Uh-huh.
it will make gross margins a little bit more difficult to achieve when you're building a smaller vehicle. But I do think that the new platform will have a smaller vehicle,
Okay.
and I think that may take some of what we call the 3 and Y today. It may take some of that volume away as well.
Okay. All right. That was one of the ones I was wondering about. So it won't be that hard for them to change the body shape on this particular way that they're doing things.
No, I don't think so. They just have to.
Or you think it'd be a hatchback, or are you thinking it will still be a sedan or Y crossover looking product?
The crossover is one of the most successful vehicles on earth. If you could get a smaller Model Y, I think it plays very well in China and Europe and
Yeah.
here.
Yeah. Yeah. All right. Well, okay, let me go to the next story then, and that is what about the Rivian VW deal today? That's the other big story today. What were your thoughts? AJ certainly had a lot of thoughts on it.
Yeah, I mean, in general, it's validation of the EV space. I'm not a Rivian hater. They're couple hours south of me here, and I think they make a great product. The issue is they haven't cracked the nut on unit economics and how to build vehicles profitably at scale. Getting up to 50,000 units annualized, 55, 60, and then be on a trajectory for 70 or 80. I would have expected them to be doing better than losing whatever 33 to $39,000 a vehicle, whatever the number was. I would expect them to be further along, both on the COG side and on the OpEx side as well.
Yeah.
So I know they've done some retooling of the product. They've taken a bunch of costs out. They've done a bunch of simplification, but now they need to re-ramp that. And the other thing I was just looking up, and I'm not sure if it's true, but I've looked at two sources that had them at 143 days of inventory exiting March. And even if it's half that, let's say it's not 143, let's say it's 70 something, that's 3 times what Tesla's at. They're a direct to consumer model, just like
Right.
Tesla. They don't have a dealer network. So that that is a problem when you have when you're short on cash. You need to be more efficient and more nimble. So that's not going to get fixed by VW. So what's interesting in this tie-up is I think it's $1 billion, but there's a lot of contingencies in the beginning, and then there's even a lot more contingencies to get to 3 billion or to get to 5 billion. And I think VW basically wrote this in a way to give them the ability to back out at various points many times. And I think maybe Rivian did part of that. Part of that's on their side to protect themselves too. So this is a partnership. They're going to be exchanging information, but I don't think VW helps Rivian make a cheaper vehicle. They are different supply chains. They are different part numbers. And in supply chain, it's all about volume per part number and driving simplicity and reducing complexity. And I just don't think VW helps Rivian solve those problems. So Rivian has to solve the profitability problem, whether $1 billion is arguably, depending on what cash burn rate you use. The last quarter was $1.5 billion in 3 months. So they're
Yeah.
$1 billion is 2 months. But if you say Bloomberg says that Gary was showing me that's going to be, half that in the next quarter. Okay. It's 4 months of runway.
Right.
It's
Right.
not solving the fundamental issue of them, running out of money basically next year. So they've got, so anyway, I hope I would love to see in 2026 a lower cost, the Rivian, the R2, the R3 line with the Tesla next generation line together, because in North America and I think Europe as well, that would really solidify the, EVs are it. You'd have two really strong EV makers and great products out there. This is what Tesla, I think folks need to understand it is helpful to the Tesla, to ramping up further over the next, if other players are also coming up and doing well too. Remember,
Absolutely.
in the smartphone world, for example, I think there's about 1.2 million to 1.2 billion smartphones shipped per year, but Apple is only about 200 million of that.
Right.
And so someone else is making a billion of it. But everybody, whenever everybody talks about smartphones, it's Apple's the best. So just remember that you don't need to have all the market share. But yeah, there's a lot. I think this was a handshake deal. I think there's a lot of contingencies. This is by no means a foregone conclusion that Rivian is now saved. And I think they need to solve the profitability issue. And I think you're going to see some improvement, but man, they got to get that working capital down, and they've got to re-ramp whatever this new tooling is, this new cost reduction reduced tooling. So I think it's going to take a couple quarters to play out, see where they're really at.
All right, switching to the economic side, I just have one story there. I started talking about this way too early. I started about 6 months ago. In fact, I think one of the earlier shows I did with you, we might have talked about rotation. Well,
Yeah,
no, it's all the conversation. Almost every headline, it seems, is
yeah.
about rotation. Is it rotation out of tech into a broader S&P? Is it rotation out of the NASDAQ into the Dow? Is it rotation out of into what do you call it? Dividend stocks and value, so-called value stocks. What do you think?
No,
No.
Apple has underperformed the S&P, and Tesla has underperformed the S&P pretty dramatically this year.
Yes.
So I think they both have to catch up. And as long as Google, Meta, and Nvidia are putting up the earnings growth, I think the money's going to go where there's earnings growth, and it happens to have been the Mag 6 and Mag 7 now, and I so I think there's a catch up trade on Tesla, and this is not investment advice. I think Apple has underperformed and has just started waking up, and I don't see a full on rotation. It's unfortunate because the indices are doing very well because the Mag 6 is doing very well. But if you look at a lot of the underlying stocks, they're just kind of some are okay and some are not doing well at all.
Right.
And a lot of the money has come from the Mag 6, but I don't see this big broad rotation. Now, will semis kind of go to sleep a little bit starting at the end of July and they wake up again in October? So you could have some seasonality with some of the semi driven stocks. We'll see. I don't think Nvidia follows any template. And I think if they put up smash earnings growth and smash they smash all the estimates for guidance, it's going to keep going.
All right, you have limited time left with me. I'll give you a choice. I can do the where we are in the markets by myself. If you'd like to handicap the event tomorrow night, would you prefer to handicap what's going to happen between Biden and Trump tomorrow night in the debate?
Oh wow, handicap. That's a good question. I mean, I think you're going to get. I mean, both of them have a question of what type of are what mood are they going to come out at? Are they going to come at as like junkyard dog fighting mood, which kind of Biden kind of came out at the State of the Union that way. I think there's calls for drug testing. I think it's funny, but I think it's probably warranted. And then is he going to be aggressive? He's going to step back and see if, how well, Biden does without without a teleprompter and for 90 minutes, standing up. And this is going to be a very interesting thing to watch. I think this is going to be one of the most watched TV shows in the last 5 years, maybe. And
Because
I think it may
everybody
exceed the
loves a
Super
train
Bowl.
wreck.
Yeah, everybody. And I think people are interested to see their current president.
Uh-huh.
This is the first time you've had two people that have actually held the office. So you can actually A/B test and have a conversation about, you're going to talk about the border. Okay, well, was it handled in this? You're not talking about what you would do. I mean, you will talk about what you will do, but you have you have two candidates that have a track record. So I'd like to think that I think President Trump will do well. It's a question of how it will be spun afterwards. Um, you know, things tend to get spun negatively regardless. I think no matter what he does, but it'll be interesting to see how the spin happens. There's no audience, and there's the mics are being shut off, and I don't know if they're sitting or standing. There's a number of things that are kind of I'm not sure, but it was kind of like, it's almost like they thought that, we'll make these stipulations so crazy, he'll never accept it. And he did.
Is can they be fair, even if they really wanted to? Or do they have that ivory tower set of presuppositions that keep them from being able to ask fair questions?
They'd have to have fair moderators, and the moderators that they have, grew up, they were, I think Jake Tapper worked in a congressional office. He worked on a gun reform packard. So I think so anyway, I mean, this is what's in, how these, same thing if you were, I don't say the same thing, but let's say if Newsmax was hosting it, I think you'd have a bias in the other direction. I think Fox is actually a little bit more, middle down the road. It's hard to say, but I mean, obviously they're biased towards conservatives, but I don't know. It's a good question. It's not a good question because, I mean, inherently they're going to be biased. But I think so many people are going to be watching them and evaluating, like, were they magnanimous? Were they actually like, or were they just kind of like puppets for their, for one party? And I think there will be some pressure on them to not be that way and to be fair. And quite frankly, in the last debate, I guess 4 years ago, I mean, there were questions asked about, hey, this laptop, hey, this, hey, that, and he was just outright like, hey, this is this information. These are all like provable lies now. So and that was, I think, in a CNN debate. So hopefully they would have the gumption to come back and say, hey, you said this 4 years ago, but we found out that these things are actually not true. So that would lend some tremendous credibility, I think, to them. But yeah, it would be great if there were fair questions, and you really want to see both sides being challenged. That's all. I mean, you'd really want to see, that's the best thing for the American people, is to kind of challenge the thinking and the challenge both sides equally. That would be the best thing for American people. Let's see what happens.
All right. As always, Jeff, thank you so much for being on board, and I will take it from here and talk to folks about what happened today in the markets. Bye for now.
Thank you. Have a good one.
Okay.
See ya.
All right. So what do we have in the markets today? Well, we had a lot of movements in the bond market, which may have impacted some other things, but it's not all that clear. But let's take a look. So let's start, as we do, with Tesla. And of course, we know what happened to Tesla today. It was up $9.02 on the day. We've got the Dow Jones only up 15, NASDAQ up 87, S&P up 8, and the Magnificent Seven mostly up. Even NVIDIA caught up at the end after being way down, caught up and was up 31 cents. The Cathie Woods were mixed during the day, completely mixed. And the percentages on that, for those who like that, is the Dow was up 0.04, the NASDAQ up 0.49, S&P was up 0.16, and Tesla was up 4.81 for the day. All right, what about after hours? Tesla down $1. It has been in that area ever since this market closed, 70 cents, $1.40. It's been kind of in that range every time I've looked anyway. Obviously, I don't look at it every second. All right, let's go ahead and take a look at those bonds, because there was massive movements in the bonds today. And what happened in the bonds is we are now up another 1.3 in the after hours. So we went from under 4.25. We were around 4.24 all the way up now to 4.329. Let's call it 4.33, all in a single day. That is a massive move, and no real obvious reasons for this big move. There was a big bond sale today, and it went well, according to the articles I've read on it. So why did it jump this much? Let's take a look at, I don't think the other items are not in yet. It's too early for the rest. Okay, let's go on to the oil. I've just messed up my thing here. Sorry. Let's go on to oil. We have oil sitting at just down a bit in the pre-market, $80.69. Staying over $80. That's been kind of, if that's for the Texas Intermediate. Brent is up a little bit, actually, in the aftermarket or pre-market, I guess, at 85.25. So that spread now is getting closer to that $5 level. There is a lot of activity in Israel right now in terms of, will Israel invade Lebanon in the Lebanese, the Hezbollah sections of Lebanon in order to, I guess, a preempt invasion. So that could be why Brent is spreading out closer to that $5 again. We have got the, let's see, the gold down down $4.40 in the pre-market to 2,308, still above that 2,300 level, but way under the 2,340-ish range where it's been recently. Silver down 0.69%. Copper down 0.35%, now sitting at $4.35. We've got Bitcoin down 1,084 today, and that is putting it right about, well, 60,850, call it 61,000. So now it's starting to settle into a range 59 to 61. We'll see how long that range sets up, and then what will happen if we get into that range. Will it pop back up, or will it pop even lower? That, again, I have no idea what is going to happen or why when it comes to Bitcoin. I'm just reporting the specific numbers. We got the yen plunging to a 38-year low. Everybody's wondering what the heck is going to happen next as a result of that. So don't know whether that yen problem is affecting that bond price or not. I didn't see any articles confirming one way or the other whether that is a part of the program. I think I forgot natural gas back here. Let me go back. Natural gas unchanged in the pre-market, sitting at 262. All right, now let's look at the equities. We have got the equities. The Dow is down 75. That would be down 0.19. You've got the S&P down 15. That's down 0.27. So the S&P is down even more than the Dow. And then you've got the NASDAQ down 86.25. That's down 0.43. So NASDAQ heavily down in the pre-market. Okay, so that's about all we have. You might want to go back again and take a look at the video I did earlier today, or actually, there was a video I put out earlier today with Brian Wang. I'm going to put that card up. What Brian and I did was we took a look at kind of a different way of looking at FSD, the different stages, as opposed to the one, is it level 2, level 3, level 4, etc. He has another kind of a look at it. I think it was a valuable look. If you didn't have a chance to check that out, I would highly recommend it. Tomorrow morning, we'll have regular programming, although Cern tells me he will not be with us tomorrow. Got a great show, though, for the midday tomorrow. And then, of course, we've got Bradford Ferguson on in the Good News Thursday slot. All right, so if you haven't hit the like button yet, this is the time. Hit subscribe, notify, and then, of course, we'd love to have more folks joining Patreon. That would be great. Down below, you'll get all the information in the description. It's been great talking to you, as always. Bye for now.